Welcome back, everyone. Our next presenter is Erin Ventures, Inc., trades on the OTC Pink sheets under the symbol ERVFF and on the TSX under the symbol EV, and is an emerging international junior mining and exploration company engaged in the acquisition, exploration, and development of resource properties. Please welcome the president, Tim Daniels. Welcome, Tim.
Thanks, Anna. Thanks for having me today.
All right, we look forward to your presentation. The floor is yours.
All right, perfect. Let me get back into my presentation here, if you will bear with me. I hope everybody can see my slides, but again, as Anna said, I'm Tim Daniels. I'm president and CEO of Erin Ventures. Today, you're going to learn everything that you never knew that you needed to know about boron and why it's an exciting mineral. It's anything but boring, that's for sure. As the slide says, Erin Ventures is poised to profit significantly as we advance our world-class deposit towards exploitation in the lucrative boron space. So let's get into it. First, I will skip over the cautionary notes. I don't think we need to spend a whole lot of time there. Let's get into the highlights of the project. First of all, our project is located in Serbia, and it's called the Piscania Boron Project. It is a high-grade, world-class boron project. It has the potential for very long life, 2+ decades. We own 100% of it at this point, although we do have a joint venture partner joining us, and I will address that in a few minutes. We are also in the process of securing our exploitation license. So it's an exciting time for us because we've finished with the exploration work, and we've now rounded that corner into the exploitation licensing phase. There is good potential for resource expansion as our deposit remains unbounded in two different directions. We have multiple different borites that we can produce from the property, including derivative products, and so there's multiple revenue streams that we can enjoy from it going forward. We have exclusive license covering 3 square kilometers. Very importantly, it's located in a historical mining region with existing defined mining infrastructure with good paved roads, rail lines, power, ports, experienced miners, et cetera, et cetera. We, as I mentioned a minute ago, we've secured a joint venture partner called Temis Resources. Now, I'll talk a little bit more about that in a minute. And we are also, along with having Temis, we're happy to have them, but we are actively seeking and developing other strategic partners as well, with off-takers, with potential buyers of the borites, with financiers, with distributors, mining companies, boron derivative producers such as boric acid companies, and so on and so forth. Because with any industrial mineral, and boron isn't any different, a small part of the challenge is getting the mineral out of the ground, and a larger part of the challenge can be, if you haven't properly approached it, is understanding who your customers are going to be. So you need to be developing your customer side, your sales side, along with your mine design side. We also have an option on the balance of the basin in which our project is located in, so another 21 square kilometers. And throughout that basin, there are other borite showings. We have done some work previously within that basin with some very promising results. And so all that is indicative of the opportunity to expand the known resource and possibly the number of resources that exist in our vicinity. Next, I'm going to talk about our updated mineral resource estimate, which was done in 2019, and this was authored by SRK Consulting out of Wales, who has authored all of our technical reports. As it says in this quick little chart, We have about 7.8 million tons of ore indicated with a 31% grade of B2O3 or borites, and another 3.4 million tons inferred, averaging 28.6. That makes this world-class, both in terms of the size of the deposit and the grade of the deposit. To put it in perspective, the two largest players in the industry today, that being Rio Tinto with their deposit in Borax, California, and Eti out of Turkey, both have deposits that average about 24 to 26% purity of B2O3, and ours is averaging, up to 31%. So ours certainly holds its own in terms of the quality and quantity of borites contained in it. The other thing that I'd like to mention at this point is that, as I said in the previous slide, we've made the decision to move forward towards exploitation. Now, obviously, we wouldn't do that without some sort of economic analysis to back up that decision, and a mineral resource estimate doesn't do that for us. Under National Instrument 43-101 rules in Canada, quite correctly, in my opinion, you're only allowed to have one technical report standing at any one point in time, meaning the most recent technical report that has been written on your project becomes the only presentable report. But it's certainly not the only report that we've completed. Back in 2014, we did complete a PEA, a preliminary economic assessment, that included a mineral resource estimate along with an economic assessment. And I can tell you that the updated mineral resource that you're looking at on your screen right now and the maiden resource estimate were not materially different, mainly because we didn't do any step-out drilling. The drilling that was added into the calculation to come up with the updated resource estimate was based on infill drilling. And so what we were looking to do was not to expand the size of the resource, but to increase our confidence level in the existing resource, because we already knew that we had 20 or more years worth of ore. And it did just that. It moved a good piece of the deposit from the inferred up to the indicated. So it did increase the confidence level on a good piece of our mineral body. And that was the whole point of that infill drilling work. And so while this report becomes the report that we're able to present, as I said, that alone in and of itself wasn't the reason why we would pull the trigger going forward with a decision for an exploitation license. And if you go back to our PEA numbers from 2014, you'll find that they were extremely robust numbers. For example, it had net present value on the deposit after tax of about $428 million US using a 10% discount rate. Gross revenue on the project of $2 billion US, internal rate of return of 64%, project payback in 15 months from startup on the CapEx, about a 21-year mine life, average annual gross revenue of about $97 million, net operating margin of over 68%. So we had some very, very robust numbers. Those numbers, along with some more recent updated analysis that we've done internally, that have been supplemented using the most recent cost estimates out of Serbia on equipment and services, along with the most recent commodity prices for the different borites, all collectively brought us to the decision that we know enough about our deposit economically to pull the trigger and move forward with the exploitation license. A little bit about our joint venture. We announced just in the past few days that we've completed our joint venture with Temis Resources. Temis, to earn their way in, has to spend 10.5 million euros on Piscania project to earn 50%. The timing and the amounts of their spend have been designed to match our development and licensing goals going forward. We, Erin, remain operators throughout the development period on the project. We also get a little bit of a bonus and a bit of shares and warrants from Temis, which is a nice kicker. And also importantly, Temis adds, some significant technical, financial, and business skills. They've got some good people in-house that will help round out our management team on the ground going forward with the development. Importantly, this amount, again, wasn't arbitrary. That is the amount of capital that we've budgeted to take us right through to a going concern mining operation, so that if we stay on budget, there is no further anticipated CapEx spend for Erin through to a going concern mining operation. Now, that doesn't mean that we can build the entire mine for 10.5 million. There is a debt component. We've been in discussions with several different potential debt financiers, and also some off-takers who would be willing to pre-buy some materials out of the deposit. And so that combination of equity from Temis, debt, and pre-orders of material should be enough collectively to build out the mine and relieve Erin of any further obligation going forward. If there are any budget overruns and there are some requirements beyond the spends that I've just mentioned, then it is a 50-50 spend between Erin and Temis going forward, after they've spent their 10.5 million euros. Development plans on the property. We intend to develop it in a rapid fashion, of course, in a cost-effective manner, but also paying attention to the highest of international standards in terms of our ore reserves, in terms of smart mine planning and development, in terms of environmental and safety standards, of course, and minimizing our social and environmental impact on the ground. And those things should go without saying, but we also feel that it's important to say those very things. Our license milestones going forward are laid out like this. We have until September of 2023 to do two main things. One is the resource calculation, and second is the feasibility study. The resource calculation is both a resource estimate and an economic assessment that would be about on par with a North American level PEA, just like the one that we already completed in 2014 with SRK. So we do have that obligation going forward and submitting that to the government. The other piece, main piece, is a feasibility study, again, to Serbian standards, which I would suggest is about to a North American pre-feasibility standard in terms of the scope and level of confidence in the study. We then have from 2023 September until 2025, so the following 2-year period, to complete our mine and processing facility design plans and submit those to the government, along with a environmental impact study. And those are the two key pieces in that licensing phase. And then beyond that, we have 5 additional years to complete the actual mine construction. So we've actually got between now and September of 2030 in order to complete the actual mine development. And while it's nice to have a lot of leeway, and that is a lot of leeway, we actually believe that we can complete all those milestones in about a 3 to 4 year period. 4 years is probably the safe estimate, because nothing ever goes exactly to plan. So let's call it 4 years to get us through to a going concern mining operation. I don't want to spend too much time on these because they go into a bit of detail. And please ignore the timelines on the top, because of course we're way off timeline. And the primary reason for that is, like most companies in the world over the last 18 months, we were put offside by 12 to 18 months because of the pandemic, the COVID pandemic. And so ignoring the timelines at the top, what is important takeaway from this is two things. One is the scope of the work and the budget of the work. And so for this first piece, again, as I said earlier, over the next 2 years, we need to complete the certification of the resource, which is about on par with our PEA level of study. And we estimate that is actually about a 4-month process. And we've budgeted about 250,000 euros to get through that step. The next step beyond that, important step, because at the conclusion of this step, we're issued the actual exploitation license by the Serbian government, and everything that we do from that point forward is from the perspective of walking around with an actual mining license in our back pocket, which obviously mitigates a tremendous amount of the risk from the project. The key here is looking at these numbers right in here, and so over the course of this about 8-month period, we're looking at a cost of about 90,000 euros. We complete the work that's necessary for the feasibility study, and all in through this period of time, we're looking at a cost coming in about 355,000 euros. So the first 2 steps in the licensing process, about $500,000, and a little better than a year's worth of work to get to that point in the process. Third step is now, again, at this point, we're walking around with a mine license in our pocket. So our risk, both real and perceived by the marketplace, has been greatly mitigated at this point. And a couple key points here. One is about halfway through this table, you'll see the budgets that have been set aside for the preparation of the actual mine design itself, which is about a 6-month process and comes in at about 300,000 euros. That's one key piece. The other key piece is right in here, and it's about a 9-month timeline in which to complete an economic impact study. It's also at this stage, and I'll just revert back a little bit to the top of this table, where if we decide that, actually our mining engineers, if they decide that at this point there is some work on the ground that they would like to go back and supplement or complete that haven't been completed to this point, this is the time that we would do it with that mining license in our back pocket. And so we've built that into this scenario, allowing for the worst case scenario. And so over the course of this third step, over this 12-month period, give or take, we've budgeted about 2.3 million euros to get through this step and to complete whatever work might be left on the ground. So to summarize, it all looks like this. To get from where we are today through to a going concern mining operation is this number right here. It's about 40.7 million euros, of which you see them broken down into the various phases. This mine and and production plant step we didn't talk about on the previous page, and that's about 37.9 million euros to do the actual mine construction and processing plant. And so all in, it's about 40.7 million euros. And again, reverting back to the numbers that I talked about earlier, needing about 10.5 million of equity from Temas gets us to this stage in combination with a debt component and forward sell of material. Then over and above that, once we've been in operation for a 2-year period, we intend to build a boric acid plant at a cost of about 8.9 million euros for a total capex on the project of about 49.6 million euros, but 40.7 of that are pre-production capex and 8.9 out of cash flow. So that's how the funding needs break out. Timeline for the actual mine development once we've received all of our approvals that I've talked about previously is we're budgeting conservatively about a 24-month run from the point in time we break ground until we've got a going concern mining operation in place. Now, as I said earlier, you're going to learn all about boron, all the things you never knew that you needed to know about boron. The modern world as we know it today would be substantially different without boron, because boron is used in literally hundreds and hundreds of products around us every day, even though we don't know it. Why we don't know it is because it's not a quoted commodity. You can't open your Kitco app on your phone and find out what the latest boron price is. Why? Because there's a very small handful of producers in the world, literally a half dozen producers that account for all the production. And most of them are private. The ones that aren't private guard their boron numbers very, very secretively. And so it's very difficult to obtain, going rates for boron. The good news, though, is that on the demand side, even though the supply side is very tight and it's a small oligopoly, and we will talk in greater detail about that in a minute, but on the usage side, as I said, it's used in hundreds of products. The ceramic tiles under your feet right now have boron in it. The boron and the glaze give the ceramic tiles their strength. The walls around you are filled with fiberglass insulation to heat you and cool you. That fiberglass, the glass gets its strength from the boron in the glass. The computer screen that you and I are staring into right now, or the screen on this telephone, has a significant amount, about a 12 to 15% boron content in that glass, because again, that boron gives the glass its heat and impact resistance. If you live in a high-rise building or work in a high-rise building, that architectural glass that is on the outside of the building, again, needs to be heat and impact resistance. Again, boron. The solar panels on the roof, and on and on and on. It runs the gambit from the very mundane industrial uses like laundry soap, through to the high tech of being the latest generation of lithium batteries use a significant amount of boron in them, and so on and so forth. So in fact, what you find is that fiberglass insulation, textile fiberglass, borosilicate glass, like the screens I'm talking about. Ceramics and porcelains account for about 64% of borite consumption. And then you have things like detergents, fire retardants, metallurgy, fertilizers. Fertilizers is another big market. Most crops in the world are boron deficient. And so boron is this critical micronutrient. And so as we put more and more people on the planet, and we need that agricultural source to be more and more productive, and we're adding more and more fertilizer, the boron content in that fertilizer is absolutely critical to get the crop yields up to where we need to be. So the uses of boron is broad and deep, and there's new applications that are being discovered and and utilized every day. So again, this pie chart shows it another way: glass about 51%, ceramics 13%, agriculture 14%, detergents 3%. Another very important point is this paragraph at the bottom of the slide you're looking at right now, and that's that, first of all, borites are very safe. They've been used for centuries. They pose no risk for humans or animals or the environment under normal handling use. And they're very, very versatile, but in many, many applications, there's absolutely no substitute for borites. So they are absolutely critical in many things that we use in modern society today. The boron market, it's valued at about US dollars 4.4 billion per year. Boron is rare. There's only deposits found in 7 different countries. It's very much an oligopoly, which, again, a lot of people immediately, the knee-jerk reaction is that that's negative for a new producer like us, but it's not, and I'll get into that in a minute. So it is an oligopoly. There's really 2 major producers that control 70 to maybe 80% of the market, depending on whose numbers you look at. And global consumption is currently matching and actually being outstripping supply. And there is, because of this lack of competition, prices are very, very stable. If you look at the pie chart, you'll see that Eti out of Turkey, which is government-owned entity, controls almost half of the world market. Rio Tinto in California, another 23-25%, and collectively another 4 or 5 producers globally make up the balance, which is between about 20 to 30% of the market. Rio Tinto's graphs here show that demand is starting to outpace supply. This red line here that's growing at a nice straight upward line is your demand, and the blue squiggly line shows the demand. And if you look at about 2019, we crossed that threshold where demand is now outpacing supply and is expected to continue that way for a while, and that's good for a new player entering into the business like us. Why is demand going up? Again, in the wisdom of Rio Tinto, who's a major player in this market, there's 3 major reasons. Energy in the form of insulation and solar panels, which we've talked about. The urbanization, more and more people on the planet, and more of those people are moving into the city centers. And so we need more and more glass and ceramics and electronics that all rely on boron. And to feed these 8 billion plus people on planet Earth, we need more and more food. And so agriculture, improving the crop yield, boron is an essential piece of that. Take a look at this paragraph at the bottom because it's very, very important. Rio Tinto estimates that over the next decade, the boron industry will need to increase production equivalent to nearly 2 additional boron mines that are the size of their California operation, which is the world's largest, in order to keep up with demand. Let me repeat that. Over the next decade, global demand will be such that 2 additional mines the size of their operation in California will be needed globally to keep up with demand. Where's that going to come from? Well, a piece of that is going to come from us. Here's another graph showing nice, neat growth in the demand for the last several years and going forward for the next couple of years on the demand side for the borites. Boron prices. Let's talk about that a little bit. And again, what you're seeing is that there is a nice stable growth rate and especially in the types of borites that we have. And I'll get into that a little bit more in a minute, but you're seeing with boric acid, the numbers growing from about the $700 US per ton level, growing at a nice, steady, consistent rate up to about 762 over the next couple of years. Colemanite, which is one of the calcium-based borites, which we have, growing from the $500 a ton range up to about 550, 560 over the next couple of years, also growing at a nice rate. And again, this bottom paragraph, kind of sums it up very nicely. The boron prices have been remarkably consistent. If you look at boron prices over the last 100 years and adjust those charts for inflation, the average price has been about $700 a ton for boric acid over those last 100 years. So the producers in the market are able to keep the prices very, very stable. In our project right now, we have three anticipated products in the mix, three different revenue streams. One from ground Colemanite, one from ulexite, which is Colemanite is one of the calcium-based borites and is definitely a low-hanging fruit for us. Ulexite is one of the primary borites that's used in fertilizers, and boric acid we're looking to bring on stream a couple of years after we start. The current prices you see next to that, current price for Colemanite is in that 480 to 500 euro per ton range here in Europe, and ulexite is running about 300 to 330 a ton. To put that in perspective or into some context for you, we are anticipating that our cash cost of production per ton of Colemanite is going to run somewhere between about $35 to $40 per ton, and our concentrating cost less than $20 a ton additional. So we're looking at all-in cost per ton to produce a saleable ton of Colemanite at about $60 a ton, and the current market is about $500 a ton. So as you can see, there's very, very healthy operating margins on that, and there's similar very healthy margins on the ulexite. Scarcity of borites, as I said, they're found in only a handful of locations. We've already touched on the fact that there's two areas, two deposits that supply 70 to maybe 80% of the world, and that's Rio Tinto in California and Eri in Turkey. The other producers, again, 4 or 5 of them, are mainly out of South America, and most of them have low quality, high cost, inferior grade deposits that we know that we can clearly not only compete with, we can eat their lunch. We know that we can take market share away from them. Also importantly, this box at the bottom, in Europe, the EU has added boron to its critical materials list, and has done so for the last several years, starting in about 2017, and it continues through today. So what that means is that European industries that rely on borites, and of course Europe is one of the major consuming region of boron products, have been put on notice that it is a scarce commodity, and they need to be forward planning with respect to where they're going to be getting their supply of borites over the next several years. Scarcity equals profitability. Jean-Sébastien Jacques, the former CEO of Rio Tinto, had said about their boron asset that it was an extremely valuable asset for them. It was highly cash generative, and in fact, their profit margin on their boron operation was about 34% in 2015, so very profitable. Eri in Turkey, their boron profits rose 25-fold over the last decade from $17 million to nearly $500 million last year. And they're looking at a profit margin of somewhere in the neighborhood of about 44 to 45%. So this is the reason why these companies, keep the market very quiet and neatly divided amongst them, and hope nobody finds out about it, because it's a very profitable market for them. Is there an opportunity for Erin in it? Well, some of the industry experts say yes. There is an opportunity for some additional small players to enter the boron industry. And even though we're looking at some fairly robust numbers that I was talking about earlier, our penetration into the market is literally the crumbs off the table for the big players in the marketplace today. And that on the buy side, globally, the buyers would welcome somebody to help break the oligopoly. And so that's the gist of those comments. And again, there are additional comments from other industry experts saying the same sort of thing. What is our market penetration strategy? And again, I know a lot of people are concerned for a small company breaking into an oligopoly when the two dominant players are as big as the Rio Tintos of the world. So several points. First of all, our planned production, the numbers you heard me quote earlier, are based on 200,000 ton a year, which is a market penetration of less than 5%. So we're talking about the crumbs off the table of the big boys. We're also talking about focusing on markets close to the boron deposit in Serbia, mainly being the EU market, which is one of the biggest consuming markets. And as well, we've been establishing some good relationships with some of the major players in the Asian market, which is the biggest single market. Room does exist in the market for additional high-quality producers, especially in competition with the inferior producers out of South America, which have about a 20 to maybe 30% market share today. Again, as I said earlier, we know we can eat their lunch. We've got a much higher quality product. We're a lot closer to the markets. We have lower operating costs. So in every way, we know that we can compete. So as this bottom bullet point says, we have a large deposit, it's high quality, it's low arsenic. That's another good point. In the European market and other markets, one of the concerns that they have with the product that comes in from Turkey these days is that it's very high in arsenic. And so the waste material needs to go in hazardous waste dumps. Fortunately for us, our material is arsenic free, and that gives us one substantial competitive advantage against the Turkish deposit. This first point on the second page of market penetration is very, very important. All borites are not the same. Rio Tinto in California, what they have is the sodium borites, and that all that goes into production of either boric acids or the pentas. They do not sell raw material, and the reason why they don't is because the consumers of the raw material, the raw borites, are like the fiberglass industry, the borosilicate glass industry, the ceramic industry, and so on. Those industries can only use Colemanite. And why? It's because the material that comes out of California has sodium in it, and the sodium actually weakens the glass. So these manufacturers are adding the boron to strengthen the glass, and the boron out of California, in fact, weakens the glass, and so it works, counterproductively. So today, those producers that are relying on the calcium-based borites have only one global supplier, and that's the government of Turkey. Are they happy with that? No. Would they welcome an alternative supplier with a good, high-quality supply of Colemanite? You bet. Who is that alternative supplier? Us. So every consumer that we've talked to, and it's been a number of them over the last few years, that are looking for a supply of Colemanite are very, very excited by the prospect of having us as an alternative supplier to them relying on one global supplier. So that's a very, very important point, and why we're going to be able to penetrate the market.
I'm sorry to interrupt you, Tim.
Yes.
We do have to move on to our next presenter. This is such a great presentation.
Okay.
We just want you to come back next time because this is such great information, and you have tons of questions.
Yeah.
So we'll send these questions to you, but we got a little bit more time next time, so we can.
Okay, I apologize, Anna. Sometimes I get caught up in this as well, and I don't watch the clock. So I do apologize. I'd love to field some of the questions.
It's okay. We would love to have you back, and we will send all of these questions to you, Tim. But thank you, such a thorough and fascinating presentation. Thank you so much for your time.
Thanks for having me. I appreciate it.
All right, everyone. So as we transition to the next presenter, remember, you're going to see a black screen for a brief moment, but stay with us because we're coming right back.